All right. Well, how about that day today? Word of the day is effed. How about that? That is what happened to the markets. Um, Hope everyone is well. If you don't know who I am, I'm Ben Collins. I am a founder and chief investment officer at Options Autopilot, and I am going to go over today all the carnage in my portfolio, what's working, what actually didn't work, and where we're at, I guess, year to date. Because going into today, I would say doing pretty well. Still technically up for the year, so we'll go over that. But yeah, a lot of volatility, a lot of sell off, and I just want to show what happened in general, and what my plan is for tomorrow and moving forward, with Trump and his tariffs. And not that we should necessarily care about that, but we always got to be aware of what's happening with the market. So with that said, I'll try and make it short and sweet, as I tell my girlfriend. But unfortunately, it might not be that way. But let's just jump into it and look at it. I mean, the markets were down, if anyone's paying attention, saw down. That's insane. I guess that's including after hours, 5.1% in one day. That's one of the largest drops I feel like we've had in a long time. Although, now that I'm looking at these bars, maybe it's technically not, but I just don't remember it being that severe more recently. So if you've been watching some of the previous ones, and definitely subscribe, I'm with all this transparency. I'm a little flustered because I just got home and I'm just trying to get this out before I go out a little bit later and grab dinner. But I wanted to show. We talked about this before. The downtrend is down, basically, after it broke the support level and came and retested. I drew this a couple weeks ago, and it pretty much followed it. Not because I drew it, of course. Obviously, other people are paying attention to these levels. And it kind of looked like it was rallying a little bit. And then obviously we got Liberation Day, and we were liberated from our profits, is what it was, not from, I guess, other countries. So what actually happened? Obviously, the market was not anticipating that, and maybe another example of why the market is not totally efficient. Obviously, now it's trying to price in multiple scenarios. So let's kind of jump into the carnage today. I got stopped out of a couple positions. I didn't get stopped out of some. Some of them actually reversed. So I obviously went from profits to losses, which is annoying, but so far, still intact and still following the rules there. On one of my MES positions, I wish Tasty Trade would leave on ones that closed today, but we can go through that. My other MES position got stopped out. I ended up putting on another one, just because I think I had kind of said that if you've been following along, if the VIX gets above kind of the level that I had drawn, I think it's like 23, whatever this level was, yeah, 23.20, approximately 23 on the VIX. I was going to be selling volatility. I did here. This one is what already got stopped out, I believe. I'll have to double check, because obviously now we got this VIX spike higher. This is where risk management's critical, and I've talked about when people are doing these 111s or 112s or any kind of short volatility, you have to be aware of your Vega exposure here. And so this is where it can really hurt you. I was hit today pretty hard, but I'm still technically up for the year on a, I guess, P&L basis. When you take out the fees, we'll look at it here. So here's what we did today. So this was I got stopped out automatically. Options Autopilot just stopped me out, as it should have. Unfortunately, it was like 3 days after it got put on, but that's just the name of the game. I had my hedge on from a long time ago, and I guess incorrectly, like I left it on, which was good, but I incorrectly kind of closed it down because I was kind of thinking that the market was expecting some of this, and so I took it off. I could have left it on. It still had, I think, 30 days or so to expiration, and it would have expanded out to $100 effectively as the max profit that it could be between the spread. It was at like 65, I think. Where does it tell me what the fill was? It ended up filling at like 63.75, something like that. I was like, okay, it's 65% of the way there, and I kind of wanted to lean more long. That was kind of my error, I guess, because the market did recover for a bit. I felt a little bit better, and then obviously it finished on the lows, which is usually bad for, I guess, the next day. So we can see year-to-date gain on paper, $801. This is where it's very annoying. So after fees, P&L only up $66. Now, I still consider that a win just because the market is, well, actually, let's just look at where the market is. I don't think that that's actually year to date, or it's not. Okay, down 8.2. I mean, if you're fully long tech, not that I want to cherry pick this stuff, but I mean, you're down a lot more, right? So a push is a win, as they say in blackjack, but it's still annoying, right? To basically pay all these fees just to make no money at the end of the day, when we're trying to be like market makers, so theoretically we should be making money like them, but these types of moves kind of take us out. So if we go to year-to-date gain on all this stuff, we can see which ones have like hurt us the most. MES, I saw the one that's open, obviously, unrealized, but the rest of this has been, I got stopped out of MES a couple times. Obviously, profitable here. So, it's not all bad, right? And consistency is the name of the game. That's why I'm not that concerned. This is actually better for our automations to just keep running as the market's falling. We're constantly selling under the market even more, and when volatility is higher. The annoying thing that happens here is, and what I think could push us a little bit lower, is people get margin calls, and you have to sell, cover, do whatever you need to do to free up margin, because most people are not going to add more money to their accounts. So that's what can push things even further, and that's where my game plan, if tomorrow opens up down, I think people are going to get margin called and have to sell off probably a little bit more. I think if that happens, also there's an expiration, so there's an option expiration tomorrow, obviously for the weekly. So I think that it's possible that you don't have another kind of sell-off. It could start down, sell off a bit, and then rally, just because I'm not a conspiracy theorist, but I've witnessed it enough to where it's like whatever will hurt the most people does seem to sort of happen, but it's more of the fact that a lot of people are having to follow risk management and close down if they get margin called. And I'm sure that the market makers are skewing their positions a certain way. I mean, they can see all the open interest. Nobody can see our trades on Options Autopilot. They don't get created until you hit your targets. Then they get sent, but like they can kind of see where levels are of open interest. So if they push people past and they kind of know people are generally short or long, I'm sure that they can kind of lean a certain way, close people down, lean the other way. Technically, they're not supposed to do that. They're supposed to be pretty much market neutral, but I'm sure that is happening. So ultimately, now I wish I had my VIX call spread still on, but you never necessarily know. The one thing that was positive that I had been complaining about, I guess, Intel was actually up today, even though it's been a drag the entire time. So, sometimes it pays to be lucky. Hopefully that's a trend of something good starting. Like I talked about, positive news flow. Today it came out that I think it's Taiwan Semi is going to be starting something with them. Bitcoin surprisingly not down that much, so that was interesting to see. Usually it's been in a risk-off environment, it's been down. Hasn't really been a flight to safety. And speaking of flight to safety, one thing that was a little bit annoying is that I do have my automation to run on 30-year bonds. So basically you can see right here, I have my automation. So what happened is we had like a third-party connection issue. We solved it now in terms of the logic to have it rerun when it hits those types of things. But in general, that would have been up today, and that was supposed to go off on Tuesday. So it would have been here, I guess. So that would have been likely helpful to counter some of the downdraft. But for the most part, one thing I do want to cover, crash beta. You may have heard this term, but this is when everything can kind of move low correlation or not necessarily with each other. But then when market sell-offs happen, everything kind of moves together. So this was kind of that perfect storm, I want to say, in that gold, crude oil. Oh yeah, we gotta look at crude oil. Some of the stuff is just nuts. It's just like, I think it's overdone, but you just never know, right? You still got to manage your risk. So if we go to the chart, look at crude oil. I mean, look at that move. That's crazy. So it had obviously broken in this downtrend. Now it's solidly back down here. I'm probably gonna leave. I have my 111 on, and I still have it on, and it's down, but it didn't get stopped out, right? So I was actually up money on it. Now I'm down, but it's not the end of the world. I'm up overall on crude oil, and my actual like strikes I feel pretty decent about. I mean, we're technically still above where my long put spread is, and then the short put is all the way down at 53.50. It's entirely possible it could get there in 105 days. We don't know what's going to happen, but I feel pretty good about these strikes. So I don't know if I'm going to mess with it. I might even widen out my stop. Don't follow me, but I might widen out my kind of stop losses right now, just because some of the stuff is a little bit crazy, and I don't think it's really going to get here. And if it does, I'd love to finish in the bear trap and make more money. That would be ideal. You can see these are now severely in the money. They were looking pretty good, like they were going to finish, right in the middle. Now we're definitely pushing much closer to the short strike. So that is sitting at a loss. That must be from after hours, because otherwise I would have been stopped out on that one. But let's see, ES, if my computer can work. So ES, again, we were up, now we've reversed down. I'm almost at my stop loss. I widened it out a little bit. I think I'm at 200% is what I set it at. Because again, I don't think these are bad levels where there would likely be demand in the market, but you never know. In general, I'm up on ES. And if I got stopped out and the market trend is down, I'm just gonna put on another one. So it's not the end of the world. Let's look at SPX here. Like I said, this is gonna be kind of a quick analysis. Basically, I think the next point of support, obviously usually round numbers, 5,000. I'm not saying that it's gonna get there. Like I said, purely guessing. It doesn't really matter what your opinion is, right? You just got to follow your plan. So I'm going to do this regardless, but I wouldn't be surprised if they started them down tomorrow. People had to basically generate margin or cover their shorts and get margin called, and then it ends up finishing closer to right around 5,400. It's called pinning. So anyone who's on one side of 5,400 or the other basically doesn't make any money. But we'll see what happens there. 5,000 is a level. 4,800 is probably another level down here. And that's not to say that this couldn't reverse back up, right? And that's why it makes sense to just continue to sell, because the more we're like continuing this, even if this continues down, if it's at least slow enough, all these strategies are kind of just doing it consistently all the way down here, which at the time, volatility should be higher, which is in our favor to make money, because volatility is mean reverting. So same thing with crude oil. Like I said, going into the driving season, you'd have to assume there has to be some demand there, and this is a shock, and hopefully we level out. Gold, that's interesting now that it says P&L is up on the day. It wasn't up today in general. Again, it was up, then it reversed to being down more, but that's what I'm talking about, like crash beta. So like this was kind of going opposite. It makes sense if they think that tariffs are gonna, I guess, really put a damper on inflation, because they think it's going to be deflationary and possibly causing a recession, or maybe they're purposely trying to do it. Who knows? Depends on who you believe. But you can see that obviously the market has been bidding gold up. Look at the increasing volume here, but Now, when you would think there would be kind of a flight to safety into this asset class, obviously it's getting sold off. So people are just reducing risk across the board. And that's what can happen at times. So even though we're diversified across multiple asset classes, you can still get kind of stung by everything moving more together. Bitcoin, I guess I should clarify. I mean, I guess it was down quite a bit, but it wasn't super crazy, right? It didn't make a new low here. It is kind of breaking this little uptrend, but that's just, I'm not like concerned on that. I'll either get stopped out and it'll put on another one or it won't. But currently I'm up on this particular position. SOFI is getting crushed. That was actually up $300, I believe, yesterday, or $400 yesterday. Now it fully reversed. And we're down for the year, of course. Intel down, but not as much as we were. We're down about $1,000. XRP is just long-term hold, which was, all these are my manual ones to clarify, like Intel, XRP, SOFI. That's all like manual. So if we look at Options Autopilot here, like I'm technically everything that's automated, I'm actually doing pretty well. If I would have just let this go and not touched anything, but that's just how it goes. I mean, obviously sometimes those things will help. Intel did help today. So, you can't fully discount that, but it is a little bit annoying to see that. I mean, it's good for me to see it, but it's also, I wish that I could get some other stuff kind of directionally in my favor. But yeah, just still have these on. These are still running. I turned off ES for now. I basically did the 5 contracts on MES instead, was my new position. Just because of my opinion that sometimes they could do like a washout tomorrow and like flush people out and then reverse it. I wanted still some flexibility and margin available if that happens to leg into another MES trade. So I didn't want to do a full ES again in that instance. So I'm just trying to manage the risk a little bit there, just because you don't know what the markets do. Like, I could just let this fully run, right? That one's going to be a manual execution. I have it set to run next Tuesday, and in reality, that would probably be the smarter thing to do, and just let things like sit over the weekend and see what happens. I do like the fact that VIX is pretty high at the moment, so that is definitely in our favor. It can always go higher, but it's elevated in general. You can see that it's kind of making a new high here. If it got up to this level, I mean, that would be pretty nuts. I would be trying to sell quite a bit of volatility, even more so than I currently am. So that would be kind of my game plan. But this should historically be a decent place to be selling vol, or at least starting automations to be selling vol for you. But you do have to manage your risk, as we can see in general. So that's kind of the short update and my game plan moving forward. There's nothing else I'm technically wanting to cover that I can think of right now. Just letting automations run, managing risk, don't go too crazy. Obviously don't follow anything that I'm doing, but hopefully it can at least be educational. I'm trying to be transparent on all these things. It's not all sunshine and roses and everyone talks about all these high win rates. Like, these things can reverse and go against you. Like, if you would have started your strategy up at the top of the market, basically, which, that does happen and has happened to some people, you've basically experienced nothing but kind of straight down movements, right? So this is not a good environment for just doing the put credit spread. But you have to understand that theoretically, long term, it should still work out. But if you go through a series of 10 stops, like, okay, you stopped at 10 times or 20 times, and then the next 80, it actually works, but that you don't have any money for those next 80, that's the issue. And that's, I guess, the meme in Wall Street Bets, where it's like, buy the dip, and they're like, with what? So that's where, when you get these margin calls and people get called, in general, this is kind of the dilemma. It's like, of course, the market goes on sale, quote unquote, but if you're levered and you're not managing your risk, then you can't really take advantage of it, and that's usually the issue. So definitely always live to trade another day. Don't risk a huge amount of capital in any one given trade. That's why we have allocation limits on Options Autopilot. So this is one of the annoying things about Schwab. You have to basically reconnect your account every 7 days, but they say they're working on a new authentication process, but it's still a work in progress. But yeah, just keep your allocations diversified, keep them smaller, live to trade another day, because ultimately when this hopefully settles out, that will be definitely a good time to make some money. Unfortunately this is in the downtrend, and when I was presenting to SDOG group, he said, do you have bearish strategies? And technically no, because in general the market goes up over time. 2/3 of the time the market technically goes up, right? But when it's going down, it's obviously not helpful if you're kind of leaning long. And most of these are mostly neutral, but they are making the most money when the market's either flat or trending up. But that's the benefit of the 111. It can make money if the market's going down, but these movements seem to be more common. And I think it is partially because people are using more kind of options instruments and volatility type instruments. It kind of exaggerates these moves in general. So again, name of the game is risk management. I would limit any kind of position size to 5% or at most 10% if you have to on any given position based on your stop loss, or actually just your general position, because that could be a lot of your account if you're just doing it based on the stop loss. So I would just be cautious, and let's watch what happens here. And don't be afraid. I'm not necessarily afraid. There's more negative news that could come out. Obviously, the market's trying to price it all in right now, and it will eventually. And usually, it overprices on the upside and then underprices on the downside, or I don't know. It basically overshoots both ways, right? So it could get pretty exaggerated to the downside. So always be aware of that. Don't assume it's going to happen, but it can happen. So as people say, the market can stay irrational longer than you can stay solvent. And obviously, even if a market's oversold, it can become even more oversold. As I say that, and now I'm getting even longer as it happens. It's reminding me that I should go and check this McClellan oscillator, even though that doesn't make any sense that this is positive. So let's try and refresh it again. Maybe it hasn't updated yet. My guess is that it hasn't updated, because I can't imagine that this could be positive on a day like today. Unless a majority of the movement was from the Mag 7. That would be the only instance. Okay, let's try this, because it doesn't seem to be cooperating, of course, when I need it to. There's probably a bunch of people on there trying to Google. Try it again. I don't know. I don't really believe that. I think that it hasn't updated yet. I would expect it to be more severely down here because I do think it was a broad-based sell-off more than normal. So a lot of stuff was getting thrown out. So this feels a little more like a, I don't know, not a bottom, because bottoms take time, but when there's panic selling, or I guess forced selling, this is what can happen. But it can definitely continue into tomorrow, I would say, and into next week, just because if people are having to really remodel their earnings, EPS estimates and everything for the S&P 500, then that could come down. We talked about that a little bit, forward PEs, either the multiple can contract, or the basically the multiple comes down maybe ahead of the EPS getting dropped. So those things need to align eventually with whatever reality is. So that's kind of what is happening and is expressed usually through the charts. So that is all I've got to say on that. Stay tuned for what happens. I will definitely post. If anything crazy happens tomorrow, I'll probably post another one. So stay tuned, subscribe for that, and yeah, let me know any comments. Feel free to email. Got a course for free on the website. Feel free to request access so you can get access there. We got a trial to use Options Autopilot for $45 for a month. I think this is honestly, no bias, a great time to start automating some of these. Currently we're only on Tasty Trade and Schwab. TradeStation is there, but we're still working on it. But if you have Tasty Trade or Schwab and you want to get in and start automating some of this stuff, even though today is not necessarily a great example, I think you can look at this and see that technically automation should be beneficial in the long term. And again, I originally created this with my buddy Zach for my own purposes, and that was the motivation. But it has been helpful for others getting on there. So appreciate everyone kind of joining and giving us feedback, and that's been super helpful. And I think long term we're going to be making a lot of money. In the short term, we just got to manage risk, and that's the word of the day: risk management. Talk to you later.